First of all, I am giving explanation of the question to you, nothing else. Explanation of the question. The question is providing the information like this. Year 2016, the company had earning per share of 2.10, dividend per share 0.69. Earnings are expected to go 15% a year from 2016 to 2019. So 2017, 2018 and 2019. During this time period, information is provided to us as the growth rate is 15%. Okay. After 2019, the that is growth is expected to drop to 6%. So afterwards, the growth rate is going to be 6% for perpetuity. And the payout ratio is expected to increase to 65% of the earning. So dividend payout ratio is 32.85% over here. And say from when the growth rate will be 6%, it will be 65%. This is I have explained to you 0.69 divided by 2.10 into 100. This is what I have explained to you. The firm has a beta 1.40 currently. Beta is given, right now it is 1.40. And it is expected to have beta 1.10 after year 2019. So it is 1.10 after year 2019. Like that information is given. Beta. The market risk premium is 5.5%. So RM minus RF is 5.50 and RF it is 6.25. The first question is, what is the expected price of the stock at the end of year 2019? So in our simple language, we can say, let us say that this is year 0. Let us say that this is year 0, this is year 1, this is year 2, this is year 3. Then the question says that first of all, you are required to compute the price of equity share at this point of time. At this point of time stands for P3. So the first question is compute P3. Second question is, what is the value of the stock using two-stage dividend discount model approach? Means we are required to make the calculation of the P0, in which they have specified two-stage dividend discount model approach. Means discounting the dividend for the first 3 years, discounting of the dividend for the first 3 years and discounting of the dividend from end of year 2020 onwards for perpetuity. Dear students, whatever the working that we do normally, the same is given a technical name as the dividend, that is two-stage dividend discount model approach. It means that in second part of the question, we don't have to do that is grade, we just have to compute the P0. I want you to calculate the answer of the first question, P3. Let us have understanding first of all. Don't write anything. Let me explain to you how we will make the computation of answer. Working note number 1, calculation of dividend per share, year 1 to year 4. Why do I compute year 1 to year 4? Because the 4th year dividend is basically required by me. First year, second year, third year and 4th year. We understand that for the recent year, the dividend paid is 69 paise and the growth rate is 15%. So we can do working like this. 0.69 into 1.15 raised to 1. Subsequent year same and third year it is same. This is the way you can do it. Or otherwise, suppose somebody says that, sir, I want to follow with the dividend payout ratio. Can I? Yes, you can. So 2.10, the recent year earning per share, friends, into 1.15. So this is EPS at the end of year 1 into 0.69 divided by 2.10, because that gives the dividend payout ratio. So technically all of you must have understood, friends. Nothing is great to explain. 2.10 is cancelled over here and 2.10 is cancelled over here. This is what happens. For the second year it is 2.10 into 1.15 raised to 2 into the same, that is this itself. 2.10 into 1.15 into same, there is no change in it. So first year dividend is 0.7935, so I'm writing 0.79 paise. Next year it is 0.91 paise. Then it is 1 rupee 5 paise. Now fourth year, listen carefully what I am going to speak. For the fourth year dividend per share, 1.05 into 1.06 raised to 1. Can I do like this? Again the answer is no. Sir, why can't I do like this? Because there is a change in the dividend payout ratio. So in order to compute the dividend per share for the fourth year, you don't have any option but to take the earning per share of the fourth year as a base. What is the earning per share of the fourth year? It is 2.10 into 1.15 raised to 3 into 1.06 raised to 1. This is the earning per share of the fourth year into dividend payout ratio 65%. That is the way dividend per share for the fourth year will be calculated. I just repeat that, so the fourth year dividend is calculated like this. In terms of the formula, it is like this: earning per share of the fourth year into dividend payout ratio. What is the earning per share of the fourth year? It is year 0 to year 4. This is the earning per share of the fourth year into dividend payout ratio. This is what we have done. Once we compute the D4, then working note number 2, calculation of cost of equity. Of course, using CAPM, RF plus beta into RM minus RF. Since I am interested to know P3, I would be interested in this beta of equity. So RF is 6.25 provided to us in the example. Beta is given to us as 1.10. Into RM minus RF is given market risk premium 5.50. So 1.1 into 5.5, 6.05. So 6.25 plus 6.05. That comes to 12.30. This is the way cost of equity is calculated. Once you compute the cost of equity, afterwards calculation of the P3 is very simple. Calculation of P3. It will be computed as D4 divided by K minus E. What is the fourth year dividend, which is an important working note over here? 23 into 1.06 into 2.10 into 0.65. So 2 rupee 20 paise. So 2 rupee 20 paise upon cost of equity is 12.30 minus growth rate is 6%. That comes to 34.92. This is the way P3 is calculated. Try to do second part of the question on your own. Friends, we understand importantly, we can go with this method if at all the dividend payout ratio is same. So answer of the second question, calculation of P0, because the second part of the question is P0. So working note number 1, calculation of K, because now for the first 3 years the beta of equity is 1.40. So it is RF plus beta into RF minus RF. RF is 6.25, beta is 1.4, RF minus RF is 5.5. So 7.7. So 13.95. That is the way the K is formed. And lastly, calculation of P0. First year, second year, third year. Cash flow, discounting at 13.95 and present value. So first year it is 79 paise, second year it is 91 paise, third year is 1.05 and 34.92. This is the amount that you are going to receive. 79 paise, 91 paise, 1 rupee 5 paise plus 34.92. So 35.95 paise, 97 paise. Importantly, understand that so the discounting factor would be 13.95 for discounting year 1 to year 3 cash flow to year 0. 0.8776, 0.7701, 6759, 0.79 into 0.8776. So it is 0.69, 0.91 into 0.7701, so 0.70, 35.97 into 0.6759, 24.31. So 25.70. That is the way we are required to make the calculation of P0. Last, I am dictating a note to you before we conclude. So write down a small note. In this question, comma, there is a change in dividend payout ratio. Full stop. So in order to compute DPS of year 4, comma, we have to take into account EPS of year 4. Full stop. Second point, in order to compute P3, comma, use cost of equity 12.30, comma, based on beta 1.1, and for P0 use K 13.95 based on beta 1.40.